Hello, I'm Wayne Hiley, Managing Director and CEO of Peninsula Energy. Peninsula Energy has made the investment decision to restart our Lance projects located in Wyoming, the United States. We'll be a uranium producer starting in the first quarter of 2023.
That's not too far away, Wayne. And then welcome back on the show. And that's the bit I want to talk to you about. But first, I need to pick you up on something. Didn't you tell me last time out you weren't going to go and raise some money and you're just going to raise $32 million?
Matt, I don't think that's exactly what I said. Look, we have to be careful in the words that we choose. We have to give ourselves a lot of options. But no, we weren't conveying that we didn't have to raise money. In fact, I think I was quite intent on sharing that that's a possibility. That we have uranium inventories, which we've kept. We have the opportunity to fund through an equity raise. We did that. We're excited about where we're headed, and we made the right decisions.
Yeah, okay. I actually need the answer to that. And the only reason I say it, because it was kind of stated by a few people, and I was like, crikey, maybe he did. I'm unsure of that one. I actually went and listened to our last conversation twice at high speed. No, I think you did not make that false misstep. That's what Hillary Clinton said. I misspoke. Look, I appreciate that. You got to lay out your options, and I guess you'd be whacked on the back by the exchange if you did anything else. So let's move on to the. I guess the important bit here is, right, you have gone through a process. It's $32 million placement to restart Lance. That's X costs, etc. And I know you're doing a share purchase plan, which is an Australian thing as well, with another $3 million. Why so much money then? How about that?
It matches with what our feasibility study, our definitive feasibility study in August projected that we would need to get the project transitioned to low pH so that we can operate using the best chemistry set for our project, and then to get us down the road to get the project up and running and to fund the development of a new well field. Our DFS, if you totaled up the transitional capital and the initial capital to get the stage one up and running, projected about $25 million US. And that's pretty close to what we're raising. We're not quite raising 25. We have other assets. We have other ways to, continue to fund. But the capital raise size was really matched to what our definitive feasibility study said we'd need to ramp up the project.
So why not offload some of the inventory? You could have just over $15 million worth of inventory at $50. So why not utilize some of that and reduce the dilution component?
Well, look, certainly the inventory has appreciated. It was back in 18 months ago, we acquired that inventory for about $31 a pound. Wish we'd have got more, quite frankly, because today it's valued at $50 a pound. But like our investors who believe in the uranium thesis, we believe in the uranium thesis too. We believe that in the course of the coming year, the opportunities to sell this material into the spot market at even higher prices is going to exist. Today, the best source for equity or for cash to fund the restart of the project really was the equity market. We're preserving the optionality that inventory gives us. We're preserving the opportunity to utilize that at a more advantageous time in the uranium market.
Right. Okay. And I've got to say, here's what I've not spoken to you about this. I don't like to give people a heads up on these sorts of things. So we had a chance to participate in the private placement. Your broker approached us. We said, okay, thank you for the information. But his words were, I'm not sure about this one because their NPV is equal to their market cap. You need to believe in the thesis that uranium price will go up before you invest in it. That was their advice. Do you think you're fully valued now? Do you think that the price of uranium will rise, and therefore, you will sort of, I guess, be attributed some valuation near where you think it should be going forward? How quickly do you think you'll get there?
Absolutely not on are we fully valued today. The NPV of this company should not be matching what the definitive feasibility study of the Lance project said. The Lance project is far more than just the Ross and Kendrick project, which is the portion of the Lance project that we did the definitive feasibility study on. If you believe that our NPV should match our or should be equal to our market cap, then you're omitting the fact that we have a uranium inventory valued at $15 million. We have cash. We have an asset that's a production facility. We have well fields that are ready to produce. And we have inferred resources in the Barber area, 30 million pounds, that have no value in the definitive feasibility study. 30 million pounds of uranium resources attached to a project that's ready for production. What is the value of that? We're absolutely missing the mark if we say your market cap should be your NPV of the definitive feasibility study.
Okay, fair enough. Talk to me about timing, right? Because you decided to go early. What is the advantage of being the first sort of non-former producer? What's the advantage of going first? Isn't it safer to kind of wait and sort of see how it all plays out? You can talk about starting the process of getting into production in Q1.
Well, first and foremost, we have a contract book, and that's always been our advantage, is that our contract book has helped us fund our company over the last 2 years. If you look back from June of 2020 until now, the only equity raise that we had done was the one that we used to purchase the uranium inventory. In the last annual report, our fiscal year is July through June. So in the last annual report, the careful reader will note that we did not go into the markets and raise money, but we ended up $1 million higher in cash than we started the year. That's because of our contract book. But our contract book has obligations. We have an obligation to supply company-produced uranium into our contract book, and that is going to happen in the latter half of 2023. So for us, absolutely important and nearly imperative that we prepare now for production so that we have inventory available to sell that was produced at our facilities later in 2023. The other advantage is really a marketing one. Uranium producers are the ones who sign more contracts. If you looked at the markets over the years, it was the actual producers who were signing long-term contracts with utilities because they want reliability and security of supply. If you're a reliable producer, meeting your obligations as Peninsula is looking ahead to do, then you'll have more market opportunities and you can name your price more effectively in uranium contracting moving forward.
Well, I guess the name of the game is also get larger contracts. Would also help larger contracts for longer periods of time with more optionality on the upside for you. I get that. You don't want to be a trader of such. You don't want to be buying in the market and selling in the market and arbitraging that. You want to be producing it. But as a U.S. producer, is there any advantage to that with U.S. utilities, given what the U.S. government is directing people to do?
Right. Well, look, the U.S. government is incentivizing the production of high assay, low enriched uranium, and just low enriched uranium, and they want U.S. Enriched uranium. U.S. enriched uranium has to come from U.S. produced uranium in the first place. It goes through. It's the uranium production goes through conversion and then enrichment. The only way for it to preserve that and hold that U.S. Title at the end of the day is that it starts with U.S. produced uranium. So there's a tremendous amount of investment going into revitalizing the U.S. Nuclear fuel cycle entities, which is uranium production conversion and enrichment. So it starts with uranium, and being the first guys back into production on the uranium side is gonna mean that we'll have really the front foot in the door on any further discussions for U.S. opportunities.
Okay, and so remind me of the ramp up, because the money side is very important. People have kind of looked at a big bunch of dilution, $32 million plus costs, plus the $3 million, so what say 35 million plus costs, minus costs, I should say, minus costs, is what you've done. That gets you into production. Is there any need for a future raise in 2023, or are you good to go and you're starting to generate cash now?
2023, we're going to have optionalities. I think there could be a call for additional cash in 2023, and this is where we might to expand the facility. Today, our facility is capable of producing about 800,000 pounds a year, and if the markets go the way we expect, then we should really bring the facility capacity up closer to the licensed approval capacity, which maybe step towards 2 million pounds a year. We have a license that allows us to produce up to 3 million pounds a year. But there's some plant capital needs to expand the facility and additional well fields, which it's upfront capital to get the project back or up to 2 million pounds a year. The first step is going to be to get it started, and then as things progress, we'll look towards funding the expansion of our capacities. So,
but talk to me about what the optionality is there for you, because if I look back, right, you remove debt by raising equity, right? You bought pounds in the market by raising equity. You've done this raise raising equity. You're going to be a producer in Q1, albeit small, and you need to ramp up, etc. And that's, like I say, it's only 800,000 pound capacity really there, but with the optionality of maybe taking it to 3 if you get the investment. So on that, if you get investment bit is, don't give me the generic answer. Give me the how would you think about constructing that now? Because you will have more contracts in place above the ones you've already got. You will be a producer with some level of cash flow. You got to kind of stop with the equity bit at some point and become a...
Well, you're right. The project, once producing, is a much more financeable project utilizing debt. I don't think the cost of debt is in line with expectations if you're trying to utilize debt to start a facility back up. So this raise needed to be out of the equity market, but the optionality for us, Matt, in the future is the debt markets, utilizing our assets like our uranium inventory or the equity markets. It really depends on what is most advantageous for our shareholders at that point in time.
Okay, and I guess it depends on what sorts of contracts you think you can get, because moving from 800,000 pounds to 3 million pounds ain't going to happen overnight, and the kind of capex components I suspect you'd want to do it in stages or phases.
Well, yeah, certainly, and it's a systematic approach which we've always taken. Let's get the project up and running. Let's get to 800,000 pounds a year, and then let's start contracting for future years where we're committed to delivering more than the current plant capacity. Once you have you have 1 million pounds a year or more of contract, which would really be about a doubling of our current contract book, then you can finance that through debt facilities, and you can make a appropriate investment decision in expanding your production capabilities.
You're at an interesting phase, I think, for conventional mining, but uranium's a law unto itself. But for conventional mining, you kind of get a re-rate going from developer to producer. I suspect you would want to see something happen there, but do you think it will?
Yeah, I do. I think this is the right time for the company, for investors to look at us. We are in the process of moving from development stage back into production. Re-rate would be appropriate.
Okay. Well, it was short and sweet, really, just to sort of talk about the money raised, and more importantly, what you're going to be doing with it. And I think you've made your case for the fact that you will be the first producer off the rank, as I say, the first taxi off the rank on that front. So congratulations on that one. What are the things that kind of concern you? Because you've come from a sort of backdrop of having to sort things out technically when you walked into the company, which you feel you've done. So are there any other kind of more technical issues that need looking at, or all good?
Well, thanks for asking that question. Over the last several years, that's all been the focus of Peninsula. You can see it in every release and at everything that we did. We were de-risking the project. Back in 2015, 2016, when the project was first built and put into production, the production performance was less than satisfactory. We recognized that changing the process chemistry could be and would be the solution to that underperformance on uranium recovery. We went through a very lengthy process of technically de-risking, from laboratory tests to theoretical to field applications. So today we're ready to really confidently move out back into production. We know the potential of the low pH chemistry, the ability of it to recover uranium at a much higher rate and in a much shorter time. We're stepping into the resumption of production with a high degree of confidence, with our permits and our people in place. We've really addressed the risks as best we could, and the last thing for us is to go into production and show the world what this will do for us.